Hi, I'm Madhu, the co-creator of Pariksh.com, a web app where you create your stock buy-sell strategies, backtest the same, and get notified of buy-sell signals from your strategy. So what we are looking at here is the result of a backtest we performed, and I showed you that in the previous video. So here, what does it say? $10,000 invested into ANET on November 20, 2015 has resulted in 43.25% return when using this active trading strategy that we defined in my previous video. So here the rule is saying when buy rule, opening price is greater than 9 DMA and opening price is greater than 200 DMA and 9 DMA is greater than the 45 DMA line. If those three conditions are met, then that's a buy signal for me. And in the sell rule, you see opening price is lower than the 9-day moving average, or opening price is less than yesterday's low, which is also called gap down. If either of those conditions are met, then I will sell the stock. So there is also a third rule in here we defined, the loss minimizing rule, which means if price on the sell signal is less than or equal to price on the buy signal, that is if on any given trade we make a loss, then we will not do the sell. So we'll just keep holding the stock till we make a profit. So those were the rules, and by those rules we had a compounded annual growth rate of 43.25%. There were 70 buy-sell round trips from November 20, 2015 until September 12, 2025. The internal rate of return, which basically takes every one of those buy-sell transactions and computes, so that would be 61%. But if you just consider the opening $10,000 and the closing $340,928, that would be 43.25%. That's the compounded annual growth rate. And then the last sale date, which is September 12th, 2025, that's the date on which our sell signal here was met. So let's move on to this second column. This is the results of what's called a coffee can or a buy and hold strategy. That's why you just see one round trip here. So this would have returned a little less than our active strategy, which is 42.94. With an IRR would be the same because there's just one transaction, same as CAGR. And it does this third column, even though it looks very low, 42.94, the difference is very slight compared to 43.25. It still is substantial in terms of the amount, 349.28 versus 333.737. And again, the exit signal being the same as the strategy. We have also implemented a third column just to show you that if we held on to the stock all the way till the end, which is yesterday's date, that was the last trading day. So what would be the returns in that case? That's a little more than our strategy. So then there are all these results you could download, transactions file, cash flow summary. I will go over those in a minute. So let's look at the transactions file. This essentially picks every one of those 70 transactions. You see here XIRR for that specific transactions. We bought it on this. The first buy happened on 20 November 2015 at this price, and these are the moving averages on that date. And then the sell date happened on 2015 December 7th, and what was the price we sold it at, the sold amount, and then the moving averages and number of days held, and the number of shares we bought on that day for that price. So it captures that for every transaction. And if you see, the number of shares keep going up sometimes they go down because that depends on the price at which you bought. So all the way to the end. So this is what we ended up with, 349.28. And the number of shares we now have is 2,285. And when we did the first transactions, it was 2,236. So we have about 50 stocks more at the end of our time period of 10 years. So thank you. And the next screen I want to show you is the cash flow. I'll get to that in a minute. So this cash flow file just shows you each buy and sell in a separate line, the date at which we bought, the amount, the number of shares, and the price. So this is 12/7. It's a sale, so that's why it's in a plus, because we got money after we sold the stock, how many stocks, and what the price was. So that's just another view of the same data. And the third file I will show you in a moment. It's just that all of the data we saw on that screen, it's all captured in a spreadsheet. There's also a fourth file I'll show you in a minute. So this is the same results, just in a different format than what you saw here, with a little more detail specified here. So that's all I wanted to cover in this video. Thank you for tuning in. Have a nice day.